Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here and I'm going to give my analysis and my thought process, and you're going to walk away from this video with some newfound knowledge on technical analysis as well as hopefully some profitable trade ideas based off of this free analysis video we're going to give you right now. But first, if you're not already a member at thetradinganalyst.com, give us a visit of the homepage and get to know us a little bit better. If you like these free videos we give to you on a daily basis, it's nothing in comparison to the membership you get once you sign up and join with the premium membership. As soon as you sign up and join the premium membership community, you're going to get instant access to the profitable trade alerts that our current members are getting on a daily basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market. All right, so let's take a look at these charts here. We're going to start off with ACIA. And if you look at ACIA, it is a crap stock. And why is it a crap stock? Because it just keeps on heading lower and lower. So these are the all-time lows here. And it's just making, in my opinion, most likely, just a little retrace higher. And then up here is a really good rejection point based off of this downtrend line. It's been valid for over a year now. You can see it got a rejection there, several rejections here, there, here. We broke this trend line here. This is a little bear flag that it was forming right there. Broke that, headed lower. So if we head higher into 45, to me that's a great shorting opportunity, not only from that downtrend line, but we have this volume point of control. You can see this red bar right here going across the screen. That red bar is where most of the volume has been traded, and you don't even need this volume by price bar over here. You can just see there's been a lot of sideways trading within this range, so no surprise that that's where the most volume has been traded. So we also have that, as well as if you draw a Fibonacci retracement level from that high there to the low right here, and you can see what lines up perfectly with that level right there, with that resistance, which lines up with the downtrend line, which lines up perfectly with that 61.8 Fibonacci retracement level from these recent highs. So about 45 bucks here, $45 to $44 to me is a great shorting opportunity. That's what you do with stocks and downtrends. You short them. So ACIA is a good short, around $45 with all those things lining up. The next one we're going to take a look at is Philip Morris PM, and this is one that we've posted on. We're actually currently long here, up nicely so far on some call options, and I'm going to go over exactly why we think that it's heading higher from here. And for one, we've got this volume point of control. You can see this big bar going across the screen right there. That's the volume point of control. You can see it's just a simple level of resistance right here, and now that's turning into a level of support. All right, so we came into that level. Also, if you draw a Fibonacci retracement level from the major low here to the swing high there, and that gives us the 61.8 Fibonacci retracement level that lines up perfectly with this support level right here. Another thing too is if you zoom in here, you can see we traded sideways for almost a month, maybe about 3 weeks straight, building up energy, and then now we're breaking out of that range. We're extremely coiled here, so it's just it really is going to be explosive here. I really believe that because we traded sideways, just building up that energy for the next eventual move, whether it was higher or lower, remained to be seen, but we thought it was going to get a bounce because of that, the reasons we mentioned with the Fibonacci retracement level, as well as the support, as well as the indicators kind of leading higher as we traded sideways. That usually gives you a hint of the direction that it's going to break. So with that said, another thing too I wanted to mention too is the volume that we've seen has been above average. All right, so you can see the volume these last few days has been above average, and that's exactly what you want to see before a breakout. So I think that it's going to head higher to about 109 is going to be that resistance level. You can clearly see 109 is a big level. Here is previous support there, there's a bounce, couple bounces there, and you can see whenever you get a flash lower like this and then a huge bounce off of it, you know this is a key level. So hit it right on the head and then bounce, and then you can see we gapped below it here and then kind of retested it from the underside and then headed lower from there. So it's an important level here. So 109 is going to be that near-term target for Philip Morris. The next one we're going to take a look at is Twitter. And Twitter here is flirting with this support level right here. If we break these lows, so about 20, let's call it this low right there, 2012, then I think it's going to head lower. I'm not as interested in shorting it here, even though I think it will head lower if it breaks that low. But I'm more interested in buying it on the long side. If we come into around 1850, we got this nice uptrend line started here. There's a bounce, there's a bounce, there's a bounce. It's also the volume point of control right here. You can see that biggest area of volume right here has been traded right there, right at that level. It's also the 61.8 Fibonacci retracement level. If you draw it from this major low here to this major high, and you get that 61.8 left side of your screen, you can see it right there. Lines up exactly at that trend line and support. So we got a lot of things lining up right around $18.50, $18. To me, that's a very good buying opportunity if we get the opportunity at that point. The next one we're going to take a look at is GoPro. GoPro here is really flirting with this level here. If you're long GoPro, you really want it to bounce against this level, okay? Now exactly why is because we have this trend line started here. Here's a bounce, and here we are coming into it. We had a bit of a potential reversal candle here today, so it could definitely get a bounce, and you definitely want to be aware of that. But you really want it to hold about $8, because if it breaks $8, you know, we're probably going to come back down to these lows right here at about 765, based off of that previous low that we made right there. The next one we're going to take a look at is Netflix. Netflix, this is one that we covered last week. We mentioned that it was likely going to head lower here, and that's exactly what happened. We mentioned it was going to come into this trend line, so our first target was hit. And this is a major trend line here for Netflix. It started back here in, what is this, August? The end of July of 2016. Here's a bounce, here's a bounce, here's a bounce off of it, and here we are reacting to it right now. So you know it's a key level. I do think that we can definitely get a reaction off of this level. Just keep in mind that if we head higher into about that maybe 196, 195 range, I think that it could definitely see some kind of resistance there. We've got a downtrend line right here. I'll extend that for you. And then also we've got the volume point of control. You can see that big red bar right there coming out. It's also the 61.8 Fibonacci retracement level. If you draw it from the all-time highs here to that low here, and you can see that lines up perfectly with that level here on Netflix. So about 194 to 196 is going to be that rejection point that we're looking for on Netflix. The next one we're going to take a look at is Tesla. And Tesla here, you know, we had this gap down. It's been in a downtrend for about 3 months here, so you really want to pay attention to the recent action. And the other thing too is, to me, this looks like, now that we're broken out of it, like a little bit of a bear flag. All right, so we traded sideways a little bit in the upward direction, and then we broke this trend line right here to the downside, and we're also below this support. So it was previous resistance there. We broke over it here and we used it as support several times, and then finally today we broke below it. So I think that most likely Tesla is going to head lower. We've got some decent support at about 280, which is where I think it's probably going to head. So pay attention to these main levels on Tesla and as well as all these other stocks, and you're going to do just fine in the market. So thank you for stopping by and watching these videos. I really hope that you learned a lot from this video. If you're learning, I'm really glad, and if you want to learn even more and get even better as a trader, then sign up for the premium membership. As soon as you sign up and join the premium membership community, you're going to get instant access to the profitable trade alerts that our current members are getting and loving on a daily and weekly basis. It's a great opportunity for you, and we'd love to help you start making winning trades in the market.